there's a little bit of skittishness in the market because this thing trades 24/7. And so sometimes you get volatility. I think there have been 15 hard drawdowns over the last 15 years. I think we're overdue for one. I've lived through 5 big ones since 2020. You're going to lose 90% of your money over the next 24 months. There is a risk to doing nothing. One regulator could get up tomorrow and put out a press release that would double the market.
In this market analysis, Michael Saylor is about to share a massive update that many Bitcoin investors are not prepared for. After months of extreme price swings and long periods of stagnation, we may actually be overdue for a major drawdown, a move that won't be easy to swallow. But this is where most people get it wrong, and Saylor is going to break down what could happen next, why being out of the market during times like this is often more dangerous than staying in, and why nearly 90% of investors end up losing money. Stay until the end, because this could completely change how you prepare for what's coming next.
If you look at Bitcoin and you look at all the other cryptos, there's a crypto economy. It's got its own future. It's very complicated and murky. We could talk about it for 3 hours. There's competitive issues, security issues, regulatory issues, nation state issues, complicated. Then there's Bitcoin, a digital property on a dominant network. It doesn't need any of the other crypto whatever to be successful. For Bitcoin to be successful, there are any of 10,000 entities. Every public investor, every macro investor, every large company on earth, any municipality, any state, any government, there's 10, 20,000 people. They go to sleep tonight. They could wake up tomorrow morning and they could say, I think Bitcoin looks like crypto gold. I'm going to go ahead and put 3% of my portfolio in it. That means I'm going to buy $4 billion of it. I'm going to buy $4 or $5 billion of it. It's nothing to me. It's like, I noticed it. I'm going to put 2-3% of my assets into it. We'll see where it goes. LFG. And they put the news release out on the wire, and Bitcoin doubles or triples. And then, if the sovereign wealth fund of some Middle Eastern state did it, if they bought $5 billion, these people have $500 billion. Like the intelligent sovereign wealth funds, they're not, the central banks of smart countries, they're not sitting on a bunch of long dated T-bills. Like some dude with a $400 billion balance sheet can delegate to a portfolio manager to look at this thing, and that portfolio manager can say, I'm going to put 2% into it. And if you pick up the paper and you read that the sovereign wealth fund of such and such state bought $5 billion worth of it, what happens is the next 5 countries, they think they'll put $5 billion into it. And then what happens next is somebody at Google will say, I guess we can hold $5 billion of it. And then somebody at Goldman Sachs or Morgan Stanley will say, I guess we probably should grab some, 200,000. And I guess what I'm telling you is there's 10,000 people that could make $5 billion in 30 days if they wanted to bend over and pick up the money without taking a risk. But at the end of the day, the future is going to be determined in part by the past. And in part of it is what the crypto industry thinks and does. But a lot of it is a function of what one regulator could get up tomorrow and put out a press release that would double the market. There's 10,000 big companies. There's 10,000 big institutional investors. There's 10,000 big governmental entities. Here's the big idea. The things at a tipping point, you don't need them all to agree. You just need anybody to agree. All you need is 1, 2, 3. 1 will tip 5, will tip 25, and then you spin up by an order of magnitude. It's not an if, it's a when. It will happen because I can't really imagine that we live in a world where 30,000 people don't want billions of dollars of money.
Michael Saylor continues to say something that most crypto analysts and maxis would never dare to say, especially at a time like this. While many people are staring at the charts, frustrated by sideways price action and short-term volatility, Saylor believes this boring phase is exactly what people should stop worrying about. According to him, price stagnation is not a warning sign. It's a feature of every Bitcoin cycle. Saylor reminds investors that Bitcoin has always moved this way. Long periods of boredom, followed by very short periods of explosive upside. The biggest gains don't happen slowly over months. They happen fast, sometimes in just a few days or weeks. And that's why he keeps repeating the same message. You must already be in the market. If you sell and wait for clarity, you usually miss the move. This is where most people make their biggest mistake. They get tired, they get discouraged, They start looking at every small dip and every failed breakout as a reason to sell. Then, when Bitcoin finally makes its move, they're watching from the sidelines. By the time they feel confident again, the price is already much higher. Saylor's point is simple. If you're not on the ride, you can't benefit from it. He also makes a very clear distinction between Bitcoin and the rest of the crypto market. In his view, they are not comparable at all. Bitcoin is the original. It's the first. Everything else came later and tries to copy parts of what Bitcoin already does. That doesn't mean other projects won't exist, but it does mean they don't play the same role. Bitcoin, according to Saylor, is digital property on a dominant network. It doesn't need the rest of the crypto ecosystem to succeed. It doesn't depend on new narratives, new upgrades, or constant innovation to justify its value. Its strength comes from simplicity, security, and scale. The broader crypto economy, on the other hand, is complex and messy. It has competitive risks, security concerns, regulatory uncertainty, and political issues. You could talk about it for hours and still not have clear answers. Bitcoin stands apart from all of that. This is why Saylor believes long-term thinking is the only strategy that works. He points out that most investors who actually make money, whether in Bitcoin or traditional markets, do so by thinking years ahead, not weeks. Short-term price swings are emotional traps. They feel intense, but they rarely matter in the long run. If you let every dip shake you out, you're playing the game the hardest possible way. Then Saylor introduces a scenario that really gets people thinking. He explains that Bitcoin doesn't need everyone to buy it. It only needs a relatively small number of very large players. There are thousands of entities in the world. Public companies, governments, sovereign wealth funds, institutions, municipalities that could decide almost overnight to allocate just a small percentage of their portfolio to Bitcoin. Imagine this. A large institution goes to sleep tonight and wakes up tomorrow deciding Bitcoin looks like digital gold. They allocate 2 or 3% of their assets. For them, that could mean buying $4 or $5 billion worth of Bitcoin. To that institution, it's a small experiment. To the market, it's massive, and once one does it, others notice. If a sovereign wealth fund from a Middle Eastern country did this, people would pay attention. These funds manage hundreds of billions of dollars. A $5 billion Bitcoin purchase would barely move the needle for them, but it could dramatically impact Bitcoin's price. Then the next country starts thinking about it, then another. Then large corporations start asking why they don't own any. Saylor explains how this kind of domino effect works. One announcement leads to another. One press release leads to 10 more. Suddenly, companies like Google start considering Bitcoin for their balance sheet. Then major financial institutions feel pressure to get exposure. Even small allocations from massive players can move the market quickly. And this is why Saylor believes the next big move can happen without warning. There doesn't need to be a long buildup. There doesn't need to be months of excitement. One regulator, one policy change, or one major announcement could instantly change sentiment. Bitcoin has doubled or tripled in past cycles under similar conditions. Right now, the market feels quiet. Almost too quiet. Many people think nothing is happening, but according to Saylor, this is exactly when Bitcoin tends to surprise people the most. His message isn't about predicting exact prices or dates. It's about understanding structure. Bitcoin is scarce. Demand doesn't need to rise slowly. It can arrive all at once. And when it does, the people who stayed patient are the ones who benefit. So while the market may feel boring today, Saylor's advice is clear. Don't confuse boredom with weakness. Focus on the long term. Ignore the noise. Because when Bitcoin finally moves, it usually does it fast, and it doesn't wait for anyone to feel ready.